today's Money Watch, we are talking about an issue that is really important when it comes to your wallet: interest rates. Yesterday, the Federal Reserve said it's cutting rates by 1/4 percentage point. This is the third reduction this year, lowering rates a full percentage point since back in September. CBS News business analyst Jill Schlesinger is here to tell us what this means for everyday Americans. Jill, I lose track of this every time. It's so technical. There's so much jargon. Can you cut through it? How is this going to affect us?
Okay, we're either borrowers or we're savers, right? Mm-hmm. If you are a borrower, the cost of borrowing just went down by a little bit. Short-term borrowing, like if you are financing a credit card balance, that amount that you're charged, that big fat interest rate that you're charged, it's going to go down a little bit. Okay. If you're going to go out and buy a new car, a used car, that loan will be a tiny bit cheaper. If you're getting a business loan, that's also going to be a tiny bit cheaper. However, interest rates are still pretty high. And I'm just talking about those credit card balances. When you think about that, before the pandemic, average credit card interest rates were around 14 or 15%. Now we're at 21%. So this has been a sizable increase. Now, conversely, let's say you're a saver. I'm looking at you, Tony Dokoupil. Maybe you're a saver. And maybe you were really bumming out because you had 0% interest on your safe money for so many years. Well, that amount went way up with interest rates rising. So savers, they're going to earn a little bit less interest as a result of this cut, but you can still get 4 or 5% on a high-yield savings account, on a money market account, on a CD. You got to work a little bit, but that's really the basic impact on most individuals. Either you're a borrower, news is a tiny bit better, or you're a saver. It's not quite as good, but overall, interest rates are still pretty high.
Why did the stock market plunge on this news? Because if interest rates are down, that means people aren't going to necessarily keep their money in the bank to accrue interest. They're going to spend it, which isn't that good for the economy?
So I love this question. You're brilliant. The normal pattern has been when interest rates are going down, that is a good news signal for stocks. However, in this meeting, we also got something called the economic projections. And the Fed officials put down on paper what they think is going to happen. If we go back 2 months ago, the Fed said, we think there are going to be 4 interest rate cuts in 2025, and then some more in 26. At this meeting, they said, not 4. We think there's only going to be 2 interest rate cuts next year, 2 interest rate cuts in 2026. So investors were caught really flat-footed. They were like, wait, what? How did this happen? We thought we were going to have much lower interest rates over the next couple of years. And so that was sort of a signal that maybe the Fed believes that the economy is good. That's the good news. But inflation is also staying higher than they want. That's the bad news. When interest rates remain higher, it makes investing in stocks a little bit less attractive.
So if you're looking at your 401k and you saw it go down 3% yesterday, you should do what?
You should take a moment. You should breathe. And the reason I say that
it's 10 days in a row.
It's 10 days in a row. It's a drag. But listen, stocks are still up very strong this year, right? So if you look at the S&P 500, it's more than 20%. The Nasdaq's almost 30%. The Dow's up 12%. You are not investing for a day, 10 days. Most people who are long-term investors, what are they investing for? The future. Yeah. And that's often years or decades in the future. And if you're watching this and you're hearing this and you're saying, but wait, Jill, I'm going to retire next year. I don't have decades. Even those people have to be investing for their future retirement, which can last 20 or 30 years.
Always sound advice from Jill Schlesinger.
Yeah.
You know what to do? Do nothing. I love that. Jill, thank you so much. Now, if you at home have a money-related question that you'd like to ask our Jill, she can answer possibly. You can send an email to askjill@cbs.com, and she could answer it on an upcoming segment.